Recently, there were some thefts of Bitcoin in the news. One was the website inputs.io, which actually got hacked somehow, and it was a web wallet service, and the hackers took all the Bitcoins from there. And then there was a guy, just an individual, who had something like 300 Bitcoins on blockchain.info and wasn't using two-factor authentication, and somehow somebody hacked his blockchain.info wallet and transferred all the Bitcoins out to some unknown destination. And he very frustratingly got a notification popping up on his phone while he was at the gym saying, "You have sent 300 Bitcoins to some address that he didn't recognize." And he actually posted about it on Reddit. And I mean, if I were him and I lost 300 Bitcoins, I think I'd be way more freaking out than he was. He didn't seem like it was the end of the world for him, but he did want to warn other people about what had happened. So I figured we could talk about this on the show. What can people do to kind of secure their Bitcoin wallets?
You know, Adam, when we first started discussing this, you said, do we really need to do another show on why people shouldn't store all of their money on online wallets and only use it for spending cash? And the answer is yes, apparently we do, because that lesson is something that we're going to have to repeat again and again to all new users. I'm not really surprised about the fact that the entire online wallet Inputs.io was hacked. It's not easy to do information security on digital money. We have 4 million years of experience doing physical security. We're pretty good at that. We've got less than 50 years of experience doing information security, and frankly, we suck at it. So, but I'd like to put a tiny twist on this, which is, if you have 300 Bitcoin in an online wallet and it's lost, whose fault is it? And everyone will gleefully point to this poor chap who lost his wallet. He didn't take the necessary security precautions. He didn't have two-factor authentication, etc., etc. But at some point, I think it's also important to point the finger at the software designers building online wallets and say, come on, guys, we can do better than this. Or come on, guys and girls, we can do better than this. If you have 300 Bitcoin in your wallet, there's no reason why, if you try to withdraw all of it, the software can't say, well, you just tried to withdraw more than 10 Bitcoin. We're going to either delay it for 6 hours, or you're going to have to set up two-factor authentication and go through additional verification. And by the way, we just sent an email notification that says, this is your Hail Mary email. All of your money is about to be withdrawn. You've got 6 hours to stop it if it wasn't you. You'll thank us later. You know, that we can do better UX design without changing the core protocol, without messing the reversibility of transactions. We can protect users against their own mistakes. And I think that this is an area that's ripe for innovation. And a lot of the online wallets could do a much better job ensuring that people don't put themselves in that situation in the first place, and give them an opportunity. Because quite honestly, I would go to an online wallet that had the 6-hour delay Hail Mary email if you tried to withdraw everything without two-factor.
Yeah, it seems like right now there's not much of a diversity in terms of the services that web wallets offer. I think you're right about that, Andreas. Like, there is a lot of opportunity for innovation there. And also, like, you brought up a really great point about blaming the victim. I mean, yeah, of course, this poor guy, like, we don't want to see anybody get their Bitcoin stolen, but he wasn't, like, asking for it because he didn't have, the proper safety precautions on his wallet, right? There's still a thief involved. Somebody still stole his Bitcoin. So why not blame that person, or blame the people who are kind of the security guards, which is those who are offering the web wallet service?
I mean, ultimately, that's the case, is that the people who are running the service are responsible for it. But does that matter in every circumstance? This guy's 28 years old. It's not like it's a corporate entity that can be sued. What can be done? Well,
in the case of Inputs.io that lost a lot of these Bitcoins, nothing can be done. In the case of the user who lost money out of a wallet, and by the way, this was on one of the wallet services that I use, that I publicly endorse, and that I'm very happy with. They have very extensive security mechanisms, and if you use them, and if you use the online wallet for petty cash and day-to-day spending, as I do, then it is a perfectly secure, very convenient, very nice service. The question is, should we design the security for the expert user, or should we design the security for the everyday user? And here's the problem. One of the most insidious and misapplied slogans in the Bitcoin space is, be your own bank. That's a terrible slogan. It's a terrible slogan for a number of reasons. First of all, because the main things that banks do, nobody wants to do anyway and don't need to be done. So I don't know why you would want to fleece.
Report yourself to the government.
Fleece yourself. Do suspicious activity reports on yourself. Freeze your money every now and then and give yourself cold sweats. Well,
don't let yourself wear sunglasses.
Disallow payments to certain types of entities that the government... No, I mean, you don't want to be that kind of bank. At the same time, you don't have the capital to be the other kind of bank, the one that does lending and offers services. So the only part of be your own bank is the security, and really you can't do that. It's a very bad slogan. Really, we should be without banks should be the slogan. We want to get all 7.5 billion of us unbanked, not bank the others. That would be a curse. But anyway, back to the point. There's a lot more we can do in terms of security, and a lot of it can be simple user experience and user interface design. There's no reason why that person wasn't receiving a nagging email every day after they went over a 10 Bitcoin balance saying, your setup is insanely insecure to a level that will be written about in the papers and be in infamy because it's so stupid. Install two-factor authentication now, you'll thank us later. I mean, we can do better interface design. We can expect more of online wallets. We have programmable money, people. Use it.
It comes back to that fundamental question of, are online wallets safe just at all? Is there a possibility to make a web wallet that's safe? Because there have been instances of two-factor authentication. I mean, David Perry, very early in Let's Talk Bitcoin's career, had two-factor authentication on his account on blockchain.info and wound up, I think he lost, I don't remember how many, but it was a substantial amount of money at the time. What's the problem here?
The problem is twofold. One is assuming that there is such a thing as safe. There is no such thing as safe. Nothing is 100% safe. You can't make your money 100% safe. It is impossible. What you can do is you can make it more difficult for the attacker to gain money that's not really worth it because it costs more to attack, or to minimize the impact a breach will have on your use so that you can consider that an acceptable risk. So, are online wallets safe enough for petty cash and daily spending use with the correct use of the security features? Absolutely. I've been using them for a year or more. I'm very happy with the services, and they can totally be made to be secure. But I never keep more than 5 Bitcoin in there, maybe 10. The rest of my money is off-site, offline, cold storage, paper wallets. And I use two-factor authentication, second password, first password, and I keep most of the keys off. So yeah, you can do it, and they can be safe. Now, the next question is, how do we make them safer for a broader population that is accustomed to a reversible currency where banks can offer recourse in the case of theft because they control the flow?
Yeah, I was about to bring that point up about two-factor authentication, and we've discussed on the show before how sometimes it can be kind of a pain. What if you lose your phone with your authentication account on it and suddenly you can't access your Bitcoins because of that? Is it better to err on the side of caution and perhaps have some people not being able to access their Bitcoins not because of theft, but because they forgot one of their passwords or they lost their Google Authenticator or whatever? I think that question is somewhat up to the individual, but it is kind of hard to know whether you're more vulnerable to theft or you're more vulnerable to forgetting your password and things like that.
Well, that's a difficult question to answer, primarily because we don't know what the customer service capabilities of these online wallets are. Or rather, when we do have need for customer service, in general, most of them have been found wanting and are not able to deliver the kind of customer service that's required. So it's not uncommon to have a problem with a withdrawal or a transaction and wait 4 or 5 weeks to get a resolution from one of these online wallets. Part of the issue for them is if they increase security, they're also going to increase the number of support requests for getting around that security or dealing with problems, as you said, Stephanie. So it's definitely not easy. The bottom line is that online wallets can be made secure, and that's the main feature and capability they have to offer, because offering as their only feature the ability to do cheap transactions online is something that you can already do with other types of wallets and isn't really a big differentiator. So I think we're going to start seeing security and customer service take a lead in being differentiators for these companies, and that's how it should be.
So let's take this a different way for a second. Is there a niche for a web wallet that actually guarantees your balance in the event of whatever? I mean, like it could be a wallet that provides it as a service, or it could be like a third-party insurance broker that essentially looks and says, okay, well, you're on blockchain.info with two-factor authentication, so we're willing to take the risk on you. Here's the payment, and essentially guarantee you.
Good luck finding someone who will guarantee that.
Well, but I mean, it sets standards. This is how insurance actually comes into existence. It's the setting of standards and the enforcement by the people who actually have it to risk. The risk goes off of the person who's buying the insurance and onto the insurer, who then becomes the full-time job of.
Lloyd's of London is usually the first for obscure and strange new insurance schemes, but very, very quickly thereafter, there are dozens of reinsurance companies that will act as underwriters on different types of policies. The question is not whether you can get such insurance, but what it will cost and how much documentation you need to provide in order to actually get it to work. And we have seen this in the information security space. So getting insurance against hacking and to cover the cost of breach notification and restoration and restitution of users. That has existed now for almost a decade, and it's become a rather sophisticated, well-defined, and easily available type of insurance policy here in the US. So I don't think it's outlandish to assume that you can have essentially private depositors insurance that's underwritten by an insurance company. I think that is possible, and I think it's a very interesting differentiator product.
This is to both of you. Would you pay for that service? If it cost 0.05%, or, you know, there was a, I mean, so what's a nominal fee for that?
I don't think it would cost 0.05% of your balance annually or whatever. I think it would be a lot more than that. But we're seeing that thefts are actually pretty common. I mean, for me, it would depend on the cost, and I would have to answer it based on that. But then again, you know, insurance companies also have an incentive to prevent crime before it happens and to solve crimes after they happen. And so and also to prevent insurance fraud, right? So they're going to be looking into this stuff carefully. And even if not everybody buys insurance, insurance companies for Bitcoin wallets could potentially have a safety promoting or a beneficial effect on the whole community, kind of as a net.
That's the sort of thing that would actually make it so that I would use a web wallet, because I've used web wallets for incredibly small amounts when I had absolutely no other option. But other than that, I really avoid, and, you know, when I'm using, you know, like Android wallets or things like that, then again, that's just keep a little bit on there until you don't need it anymore, and then move it off. But if there was like, if I could know that this is not going to be a problem I'm going to have, then it's more convenient. But lacking that, I don't trust it.
Well, the burden of an insurance scheme like this, like a depositor insurance on a broad wallet service, would not fall on the customers. It wouldn't. It would fall on the provider of that service. And they would pay for it in order to get the differentiator and competitive advantage that such a guarantee would offer. And the thing is that it wouldn't be a matter of, look, here's our security, now tell us how much we need to pay in order to insure this. It would be more of a back and forth that would probably take months, which would involve, here's our security, well, we can't insure that, here's where you need to improve, and if you pass these, and these standards and submit to these, and these audits, then we can offer you a plan for X. And essentially, the companies will have to up-secure themselves to a level that meets the scrutiny of the insurer before they'll issue such an insurance scheme. It's totally doable, and it would be a good competitive differentiator. And as far as I'm concerned, I don't think the customer should ever pay for that. That would be the cost of doing business and a great competitive differentiator.
But they may pass that cost on to the consumer and say, well, there's a fee to use our wallet, right?
They may, although over time I can't see that lasting very long because someone else is going to offer it for free. And keep in mind that many of the same things the insurance companies will ask for will eventually become regulated constraints and requirements in most countries. So I wouldn't be surprised if you start seeing this. The companies that are interested in regulation will pursue this.
I was wondering about that before. Like, why doesn't something like this exist yet? But perhaps it's coming.
Well, even if it did exist and they're currently in conversations with, say, Lloyd's of London, it's a multi-month or perhaps even multi-year process. To reach a level of clarity, as long as Lloyd's understands the risk and can put it in a bracket and say it's going to be no less risk than this, no more risk than that, then they can stick a premium on it, no matter how weird the product is. it will take a time for them to become, or any reinsurer to become comfortable about the range of risk they're taking on in Bitcoin and to understand it.
Just imagine the day when Lloyd's of London is insuring Bitcoin stuff.
It will come soon. They have insured everything that can be insured ever in the history of insurance. So why not Bitcoin?
One of the things to keep in mind, Stephanie, is that, you know, a year ago, we were in single digits for the prices, right? I mean, like, it's November now. So a year ago, I think we were at like $9 or $8 or something like that. You know, a year ago. So we've come really, really, really far. And a year ago, it just didn't matter at all because the price was so small that the amounts you were talking about weren't worth the attention of anyone. But now, you know, now a year later, this is the sort of pricing that actually makes something like this exist. And these are the sort of events, the high profile events that make something like this come into existence because clearly it's needed and suddenly the market is there and willing to pay for it.
Exactly. Just as those Bitcoin are sitting in your account, the risk of holding them increases with the increase in price. Price is almost irrelevant in the long-term survival success and technology value of Bitcoin, because Bitcoin is so much more to humanity than simply a currency exchange rate. But in the tactical short term, the exchange rate defines our purchasing power, it defines the risk level we're facing, and also the risk premium we're willing to pay to ensure our losses. So essentially, the increase in price has created new markets now, as you said, Adam.
And it keeps doing it too. I mean, that of course is the other thing, is that like we see this like every month, you know, something different is happening and you can trace it back and say, okay, that, you know, that's the spike where that person got in.
That's the aspect of Bitcoin that makes it look like an IPO. The exchange rate price increases is creating funds among many of the people invested in Bitcoin who are going to turn around and reinvest those funds in making Bitcoin better. So we are living the IPO of Bitcoin, and we are making internal gains in the currency that allow people to reinvest.
Hi, listener. Here at Let's Talk Bitcoin, we're building a global network of correspondents able to contribute on-the-ground perspective when cryptocurrency-related information comes across their filters. If you'd like to join our global conversation, send an email with your name and geographic or cultural niche to apply@letstalkbitcoin.com. Just like Bitcoin, the only barrier to entry is your time and good work. Thanks for listening.